Welcome back to another video, and today we're going to be talking about why, obviously I've said and I've done loads of videos about this of like why you should be investing, but this is another reason why you should be investing in my opinion. And this is something that I've been consciously being more conscious about in the last year, I say. And this is a reason why, and it makes you realize like the hard work you can put in now, then you could really seriously like help your future self out massively. And yeah, I'm going to show you an example and a reason why that is the case. Obviously your capital is at risk, and when you do invest, everything's not guaranteed, in the sense like you need to really do your research on what stocks to buy, or choose maybe to get into the S&P 500, so you can be more of a passive investor. But obviously, like I say, your capital is at risk when you do invest. If you want a free fractional share worth up to £100, then use the link in the description, or use code Ben on Trading212. You can even use that if you've had an account for the last 10 days, and you can get a free fractional share worth up to £100. As you can see, if some of you watch my videos and see the portfolio that I've got, we're going to see if I just left that portfolio as it is right now and just completely sold everything up and just decided to put it into the S&P 500, that historically, obviously over time, goes up about 10% a year. We're going to see what would happen when I reach my 60s and when I retire, how much money I would have without putting any more money in. So literally just leave it, forget about it, get on with my life. People don't invest. Like, I was looking at stats and it's just insane how little the amount of people in the world actually invests in the stock market, because of it's considered, a lot of people have this really bad perception of the stock market, which I can understand, because you can lose a lot of money in the stock market if you don't know what you're doing, and that's why it's important to do your research. But if you look into certain things, like if you want to, like the S&P 500 is a great way historically to get that 10% a year. And obviously it's not guaranteed, because history could change and things could go wrong. As you can tell on the screen right now, this is going back to the 1950s, and obviously there's been every year a correction or a crash or a little drop on the S&P 500. It's normal, that's just what happens. And as you can tell, most of the time it is in the green. It ends up recovering, and sometimes recovering insanely well. But then there are times like the 2008 where it went down crazy amounts but also barely recovered, and that's another thing. Same with in 1974. And that's why it's important that you just average every month in, because if you were to, let's say, put money in 2008 or 2007 before, and you left it and then you just didn't average in and you just left the money there, it could take you a few years just to recover your money. Same with back in 2000, the dot-com bubble. If you were just to put a lump sum of, let's say, 10 grand into the S&P 500 in the dot-com bubble at the top, and you didn't average in, you would have to wait, I think it was like four years or so to get your money back from the stock market, to then start seeing a growth. And that's why it's important that if you were to put money in, that you would average in, like, I don't know, £100 a week or whatever it is, or £500 a month, £400 a month, every single month. Then you're averaging down the position, and then you're also essentially riding up from the bottom. There'll be a bottom, and obviously you would have bought some shares at that local bottom, and you'll be riding up that gains really. So yeah, on average it'll just work out to the fact that you'll be up eventually. And it's hard to explain until like you actually start like investing in like dollar cost averaging that people say, because it is so true, and it's a massive powerful thing, to be honest with you. And also, like you say, looking back at the chart from what I've seen, like obviously what we were mentioning there with the dot-com bubble, which was 2000 up until 2002, it's saying that 2003 it started recovering. But like that was the example. Like, you could have bought then in 2000, like I say, and you just, if you weren't averaging in, then yeah, you would have had to wait years to get your money back. But if you were averaging in, then you would be loving life, to be honest. Obviously it would be horrible because you'd be constantly going down for them years. You would constantly be going down because it's just never gaining. But over time, you'll come out on top, because then you had years where you were going up 28%, 10%, 5%, 15%, and then 5.5%. And then obviously a horrible drop in 2008, but then you would have been averaging in again. And then you would have had a nice run of 26%, 15%, 2%, 16%, 32%. Do you know what I mean? So the longer you're in it, the better the outcome, and also the more risk that shrinks. The risk pretty much shrinks as the time you've got into the S&P 500. We're going to now see how much I would have in the next few years and see what will happen if I weren't to invest anymore. So I think I calculated, if I, as it stands right now as I'm recording this, if I sell my crypto and then sell all the stocks and just chuck it into the S&P 500, I'd have about 93,000. And if we go 10% annual, and if I want to retire when I'm 65, I'm hoping to retire earlier if I can, but let's say in 40 years time, and I don't put any more money in, I would have nearly £5 million. So yeah, to know that I've actually worked so hard to get that amount of money, and if I just leave it and just don't do anything anymore, I'll have £5 million. But obviously £5 million won't be the same as what it is today. Inflation will be obviously making that not look as high, so that's why it's important to constantly reinvest as well. I hope you enjoyed this video, and if you did, hit a like button, subscribe if you're brand new, and I'll see you guys in another video.